Yes, so we're going to talk about the sharp end of where things happen in the financial in the community. In this panel, we're going to explore the issues that community and government are seeing at the coalface right now. We want us all to see what's ahead and what needs to happen to address emerging issues and help those in hardship. So let me introduce you to these lovely people. Sitting next to me is Jake Lilly. Jake is a senior policy advisor at FinCap, which is, I'm sure most of you in the room know this, but I'm saying it anyway, an NGO supporting 900 financial mentors across Aotearoa. Jake works with mentors to understand and then resolve the systemic issues that cause whānau to face hardship. Before that, he worked at the Consumer Action Law Centre in Melbourne, and with a focus on fair access to essential energy services while he was there. And all of this mahi has involved pointing out the harm to our communities that can be avoided if we appreciate the many reasons that any of us in this room could find ourselves unable to pay. So welcome to Jake. And sitting next to Jake, we've already met Mark a little bit this morning. It was fantastic to have your help earlier and lovely to have you on stage this afternoon. Mark is the General Manager of Safe Strong Families at MSD. Safe Strong Families and Communities supports a wide range of programs and initiatives to prevent and reduce vulnerability and harm for individuals and whānau and communities. They also fund and manage a bunch of key relationships with the social services sector. And right now there's a big focus on leading MSD's response to family violence, sexual violence, and building the financial capability of people in hardship. So welcome to you, Mark, as well. And also down the end we've got Michael Ward. Michael is Senior Policy Advisor for Christians Against Poverty, and CAP gives free help to thousands of whānau across Aotearoa to escape from unmanageable debt. Michael is passionate about insights and stories about helping people in severe financial hardship. He has a really deep understanding of the challenges and barriers that families face on their journey to financial resilience, and his current focus has been on the harmful influences of irresponsible lending and on advocating for better protection for vulnerable consumers. So please give a very warm welcome to Jake, Mark and Michael. So I'm going to begin with this question that I want all three of you to answer, and you can go in any order you want. Just be enthusiastic, fight each other for a spot. I want to know what you have come to believe about your work that not everybody agrees with. What's your controversial idea?
I can speak to that.
Yes, please.
Kia ora.
Kia ora.
So good to see so many financial mentors here. Awesome work. The research that we saw before really painted the picture of those different kind of segments of people on their journey. The work of Christians Against Poverty really focuses on those daily distressed. So I'll caveat everything I say to say that's the focus group of our work, those who are living in perpetual financial hardship. The one thing I'd say that I've come to learn is that there is a big push from industry and government that education and access to information is a big part of the solution. They have a place, but first and foremost, it's advocacy. People who are in severe financial hardship, they need advocacy. They need someone who can stand alongside them and work with them to help them overcome the many barriers that they'll face.
That makes sense. Yeah.
I was going to say the same thing. So I do get frustrated. I sit in rooms often talking about issues, and it seems one of the quickest ideas thrown out there is, look, more education in schools will solve this, and I just can't marry that up with it takes you 9 hours to read terms and conditions on a lot of the issues we see coming up, and you're expected to sign that in 35 seconds. So, it's a part there. I think there's some great ideas coming out of maybe education around complaints for young people, and actually raising, this was unfair from the start, and something needs to change here. Something like that might be appropriate, but really we need a lot more consumer protection, a lot more enforcement, and a lot less barriers to raising these issues.
Great. That's a new idea for me to get my head around. This is great. Thank you. Yeah.
For me, just been working in community services in terms of the government for quite a long time. The thing I'd like to sort of see change is services being a bit more integrated for our whānau. So, one thing that really annoys me is that we'll fund services for children through OT, and then, mate, you look after the adults. Families don't work like that, do they? So being far more integrated in our communities, in the way we look at how services are funded out there, I'd like to see changed. The other thing, for years, we've done things here in Wellington, so let's public servants design services for our communities we don't even know. And so just turning that on its head about letting communities lead and supported nationally would be a great way for things to change.
Can I follow that up, Mark? I want to follow that up because it's clearly something that there are people in the room who passionately agree with you. How do you do that? How do you take it out of Wellington and take it to the communities?
You've got to, it takes much longer. You've got to work at the community's speed. So each community is going to be different around New Zealand in terms of their capacity to lead or get things done, but they're all up for it. You just have to be there to support them, make sure they've, if they need support to do bits and pieces, provide that supporting capability to get things done. For example, I had a service the other day and we let people actually write their own service spec, which would be unheard of in, I don't know if anyone's ever done that. And someone goes, we don't know how to do that. So, well, we can actually help you get that done. So that's the kind of, you've got to support people as we go along and build that capability to get that done.
Thanks, Mark. That's lovely. Michael, I'm going to go back to you. I want you to start to draw a picture for me of the things that you see that maybe other people don't see. What are you seeing at the coalface that many people don't see?
I think this will be familiar for most financial mentors and debt solution specialists who meet across the table from someone who's really struggling. And that's the pain that's associated with financial hardship. It's not just about the money, it's about the complex web of all the other factors that are going into it. And I think that's often overlooked when it comes to industry solutions around the challenges that someone faces. Often what they need is space and time to consider their options. It's hard if you're being asked to wait on hold for a long time to speak to someone who can't make a decision on your behalf, who can't help you. It's hard if you're being asked to make a choice about a financial product that you don't understand. So yeah, I think at the coalface, understanding the pain that people are going through and allowing them the time and the space and access to support to help them is really critical.
Yeah. Thank you. Jake, what about you? What are you seeing?
I guess my observation is I've come from Australia. There were financial counsellors there, financial mentors here, working with both. And it's really interesting that sort of the amount of things you face in a role like that, the amount of support you have. I have financial mentors who tell me, realistically, once all the extra hours they put in to clean up things that have broken, they're getting paid below minimum wage. They haven't got much support and it's super stressful. So I think what I'm seeing is a whole lot of issues where things haven't worked properly get pushed onto financial mentors, and then we don't really have a sustainably funded sector. And that's a real worry. I also hear from mentors who are worried they don't have a job in the next budget. And it seems to be year to year, we're constantly waiting on these funding things. So that's a really undermining people being in our sector from a young age, seeing it as a career, feeling secure in their jobs and going forward. And it's a real worry for me, having come from that Australian model where I know people who start in their 20s, they're getting into their 30s, 40s, 50s, retiring now in the sector, and they've been able to build that institutional knowledge on how to navigate all those really difficult scenarios. So I think just an observation I make, and I thank financial mentors as well, because they're not really funded to talk to me. They don't have that much time between all these things, and they share all these generous insights, because I am just one of those people in Wellington sometimes. So just want to thank, there's a lot of financial mentors in the room for all the great work you're doing.
I want to know where the financial mentors are. Can you, yeah? Yeah. Yay. What do you? Oh, sorry, Mike. I haven't asked you to answer that question as well. What are you seeing at the coalface that you think other people aren't aware of?
Same as Jake. I get my information from coming through from my team, talking to mentors and actually FinCap. Actually, one of my key things about going to the coalface is actually being on the coalface. So, just before the COVID, spending the day at Salvation Army in South Auckland really opened my eyes to what was really going on. So doing that type of thing, you really see what's going on for some of these families. But sort of the latest thing for me is, and been talked about today, is just the debt, and it's great to see. I know IRD and MSD are actually working and looking at government debt. I actually, there's $3.5 billion of government debt for, with 566,000 people. So, that's becoming a real issue. So that's just spiralling for people's lives. So, greater debt, less income. They just get to the bottom of not knowing what to do. So that's where I see a real issue.
Yeah. Can we talk about some specifics of where the problems are lying? Can we talk, for example, the arrival of buy now, pay later? What has that done in terms of financial stress? Any of you?
I think just a lot of headaches that we're seeing. Financial mentors are just frustrated at, 13. Yep. These are credit products, and they should be regulated like credit products. Hoping that decision comes out very soon and just clarifies it, because everyone knows that's where it's heading. And the priority there for those traders seems to be increase their market share at any cost. Don't really look at the quality of what they're doing, from what I'm seeing anyway.
Yep.
And again, financial mentors cleaning up the mess there, like they have for other lending, which has come under our safe lending laws now.
I'm jumping back a little bit, but can one of the three of you, maybe I'm the only one in the room who doesn't have an entirely clear picture of this. What does a financial mentor do? What is the role of advocacy in this space? I mean, what does a day look like for somebody who does that job?
I might be best. Yep. There's
Jack.
lots of mentors here too, so get on the Slido. But I think it's people usually are coming in the door who have really hit this is their last option. It's a huge step to reach out for help, so it's a lot of rapport building up front first, and then actually for someone to share all of their financial affairs and get a real survey of all the issues there, all the options there for someone to take up. People then say, well, yep, I want to go with that one, or I want to go down the insolvency path or the KiwiSaver hardship path, which are both really difficult decisions to make, but people are forced into those corners. Yeah. That, or then go to maybe an advocacy side otherwise with maybe this lender shouldn't have given me what was always going to be an unaffordable loan in the first place. Thank you for our safe lending laws, so we can actually get a lever there to undo that. That's sort of what it looks like. These things take heaps of time though, and people need to feel there's something to engage with. That's why we need really strong consumer protections, so that a financial mentor can say, this is the clear expectation and someone's done wrong by you. Yep. We can pick up the phone and change this.
Great. That's a really helpful picture that you're drawing. Michael, can I just come to you? You did some advocacy work recently that uncovered unfair practices in car financing. Can you tell us a little about that, and tell us what are some other areas that need that kind of attention?
Yeah, sure thing. This is my favourite subject.
Yay.
Half of all the clients that come to Christians Against Poverty who are struggling, they have a car loan that they're struggling to repay. They're on a low income, they're on a benefit, and they're paying $170 a week towards a vehicle that they just cannot afford. The research that we looked into uncovered a myriad of problems. The first was that the loans in so many circumstances were unaffordable at the beginning and should never have been given. It's been really helpful to have a conversation with the Commerce Commission recently, who recognise the scale of the issue and are making some significant steps to increase their level of enforcement activity, which is really key. That was the primary finding of our report. The second aspect was that people who are being burdened with these car loans that are very commonly 30% interest, and if you default, there'll be 40% interest. They're being saddled with insurance products, like add-on insurances, right at the beginning of the journey, that they pay for up front, that they don't fully understand, And as the Commerce Commission's report that came out just last year that looked into the sector found, you have such a low percentage of actually being able to make a claim. One of the really common insurance products, to make a claim that's successfully approved was about 2%. And there's no value in some of these products. And within the context of building financial capability, we recognize the importance of insurance, but insurance that's beneficial to the consumer and is of good value. So what's being done about the insurances that are they're not worth the paper that they're written on? And the third thing that came out of the report that we looked into was really about the role of immobilizers that are installed into vehicles. Now, this is, for most people that I've spoken to about the subject, it's something they don't know that exists. But for some lenders, they will install a disabling device in your vehicle so that if you don't pay, they'll switch off your car. You can't use your car, you can't get to work, you can't take your children to kindy. It's hugely damaging.
It's like a horror movie.
Oh, that's what I thought.
Yeah.
So there's rules and regulations around how that's operated, but it's Wild West stuff. And really we have to ask about what's the role of a responsible lender in even using these things. So that leads like heavily into advocacy that we need to just explode open. Well, CAP's really done some work in the space over the last 12 months. I've got our client rights advocate here in the room with us, and he's full-time working just to raise disputes. He's got an amazing success rate. It's like 100% success rate in raising complaints to get money back to borrowers. But we're only just scratching the surface. You know, if you think about this, just the tip of the icebergs, we'd love to see advocacy really invested in, so that people who need advocacy can access that and actually get money back in their pockets. They don't have to pay $170 a week. They can start to afford to feed their children properly.
Yeah, wild. It's partly based on a question here, but it's also been sitting inside my head. We started the day by talking about how important education was. We're talking now about how advocacy is really important. It also strikes me that one of the real problems is just people don't have enough money. You know, like there are all kinds of solutions to poverty, like education and advocacy, but one of the best solutions for not having enough money is having enough money. What do we do about that? Do any of you help me answer that question? MSD, what do we do?
Well, you know, like it's you provide support at one end, and it's saw during the the end of the cliff stuff, which kind of you saw that at its for. You didn't actually need to prompt communities to get out there and support families out there. They just went and did it. They didn't need us telling them what to do. They just needed the support, the funding to do that. And I think that kind of just give me the money and let me get on with it. That kind of worked for that period of time. Whether that kind of way of working happens and that trust thing, that's a long way to go, I think. But the other thing is just advocacy does work in terms of influencing politicians. I see that all the time. I think my mate here in FinCap, they did a great job around the Triple CFA. They were treating the terrorists, talking to politicians, and actually made a real difference to what that act that you've got today. I think just that policy difference, but giving people more money, and I think like the welfare reform stuff that the government have made a start, raising thresholds, more money in benefits, but at the same time, obviously with inflation and all the costs, they're probably not much better off. So I think that's the wicked problem politicians have to solve.
Yeah. Anything to add to that, Michael?
The work from the Welfare Expert Advisory Group in 2019 was really clear. They demonstrated that for different types of family groups, relying on the benefit to make ends meet, it was really difficult, very challenging. And Fairer Futures has updated that this year with, again, some analysis of benefits back in April and what their current expenses are. And they showed that 12 out of 13 different types of family arrangements and benefit arrangements were in the red. You know, they're going backwards. If you add debt repayment on top of that, it just totally torpedoes everyone's circumstances. So our work and advocacy at Christians Against Poverty focuses on the debt aspect, just to help them get back to a square. Our desire is to see people free from debt, just so they can get back to a place where the money that they do have can be used for their family, not to service some lender. On top of that, we would just support the outcomes that the Welfare Expert Advisory Group have put forward and their recommendations. There's some great organisations here that continue to advocate for better circumstances and better income for beneficiaries and low-income earners.
Yeah. Jake, I'm coming back to you now. A double-headed question. Tell me what FinCap does to support financial mentors, and also I want to ask you what the top policy changes are that you're advocating for.
Yeah, so I guess with us, we're there to support financial mentors. We're not a peak body as such, but we do training. We provide the client relationship management system to a lot of financial mentors, so just helping do the basics, which still have fundamentally seemed to have been the same from people I've talked to for years. Do a budget first, look at what the debts are, look at the cash flow going forward, those sorts of things. But in terms of what we really want to see going forward, we've got 3 priorities we're working on at the moment. We could work on so many things. I think housing's always standing out there as a key driver of the issues here. But we've picked on some spaces where we think there's some real change. Debt collection, because a whole lot of issues end up in debt collection. And particularly those ones where people just could never afford things and there weren't really some protections in place at the time. We want to see, well, really it's unacceptable. We have very under-regulated debt collection in this country comparatively to other countries, particularly Victoria, where I've come from. We want to see people to actually have the right to access essential services in the first place. I was shocked when I came here. People don't have the ability to get a power contract if they need one. And the things we see people having to do to get around that, or going on prepay and just disconnecting every 2 weeks because they run out of money and nothing's really going on there, that's gutting. And bank accounts, I'm still shocked that people can't get bank accounts, or the amount of work financial mentors do just to get someone to get a bank account so you can build financial capability from there. But I think the one really that we're focusing on is actually effective hardship or payment difficulty policies from both government and from organisations, particularly those essential services providers. Again, a shock coming from Australia, where things have probably matured a bit more in terms of approaches. You're starting to see even regulation that people need to be believed up front when they come to you and say, I don't have the money to pay you, and then just get on with working out what's sustainable, at least in the short term, while things might improve while they work with a financial mentor. We don't have that. I'm seeing so many conversations that are talking about, well, there might be a little bit of fraud here, so we're going to design this entire system for punishing people and make it super hard to get through all the barriers to get a fair outcome. And people are dealing with 14 different problems at the same time, 40 problems at the same time. When they see a financial mentor, they've got to do this with almost every player often. So I think really what we'd like to see is people being believed, particularly when you look at those income stats. If someone's on the benefit and they tell you they can't pay, just believe them, it's true, and get on with, well, how can we work best from here?
Following on from that, and for any of you to answer this question, maybe Mark, how do we better market our BFC services to ensure they reach our most vulnerable? Is there sometimes the situation that money support is available, but people don't know and they're not proactively being told?
Yeah, one of the big things that my team over there, that we're really trying to do, even within my own ginormous organisation, 10,000 people, just the frontline case managers, making sure that they understand what building financial capability services are out there and what products and services are available. That's something that we're really working hard to make sure that they know what's going on. Really, it's a bit like the really encouraging, I was saying before about communities leading and getting to know each other and who each other are in the community and what they can do. I mean, it sounds easy, but it is actually really hard and takes time and effort to get know who the people are that can actually help your clients. Because I know some BFs have been into sites and actually the mentors have been in there, and then some sites you go into, they often don't know where to send their people, making it easier for people to know where to get help. So maybe I think we've got a bit of work to do that for the sector so that we can help direct people to those on-the-ground services better. So I think there's lots to do to improve that.
Yeah. What? Oh, we've kind of answered this. What, are we asking the wrong questions? I'm going to ask it again because it's a very popular question. Are we asking the wrong questions by asking people to be better with finance? Should the government focus first on the wealth gap in New Zealand and systemic inequalities?
Yes.
Correct.
Yeah, this is a real challenge. It's a myth that I constantly have to bust, and I'm sure every financial mentor in the room has done this from time to time, that your clients are in the situation because they're bad with money. That's so untrue. Many of our clients are amazing with money. They're great. To make what they have work is incredible. The challenges they face and the strength they need to manage to get through to Tuesday, when the benefit comes in, is incredible. They just don't have enough. And if they had more, or if they had less debt, it would work out. To answer the question about are we asking the wrong questions, I think so. And it comes back to this framework of building financial capability. And I think industry and government really need to ask questions about whether some of the products and services that are being marketed, particularly to the priority audiences of this very strategy, whether they're actually building financial capability for our communities. For example, add-on insurances that in their current format that don't add any value to someone's well-being, to look after them in case they lose their job. Are they adding any value? Are they adding to financial capability? No. What about the role of buy now, pay later? It's marketed as a convenient tool, but do we really want to normalize paying for today's goods with tomorrow's income? That's the opposite of financial capability. All financial mentors know that. This is what the strategy is. So I think there's a role not for financial mentors and debt solution services and community organisations to pick up the pieces. It's for government and industry to say, are we really supporting the community, particularly the priority audiences that we care so much about, by giving them products that are actually suitable for them, like unintended overdraft. What is that? They're mostly used by people who can't afford to go into debt. Do you remember the time when you had an FPOS card and if you tried to buy something that was $5 and you only had $3 in your account, it would decline? That leads to good financial capability because then people have to be forced to make a decision. Yeah. So some of the products and services that are regularly promoted within our community and marketed, we really have to ask a question around whether they are building financial capability.
Yeah, great. Thank you, Michael. And so following on from that, a specific question, what role can the banks play to improve support for individuals in hardship and supporting the financial mentor community? So part of that answer is accidental overdraft, is that what it's called? It seems like a terrible effing idea. So that's one thing. What are other things from any of the three of you? What are other things that the banks can do to support people in hardship?
I think people have a most people have a bank account, and hopefully everyone can access one, but it's not the case. But because of that, products like that and energy providers as well, you've got an overview, particularly if you're a large provider, of when someone might be starting to get into difficulty, and you can start introducing the idea of reaching out for help early through data segmentation. I know companies will do the segmentation anyway around selling products. What about a different purpose? What's the best time to tell someone about financial mentoring? It might take telling someone about financial mentoring 20 times before they take it up, because it's a huge step to admit you've got a problem. And I think just before as well, there's this education piece. People do come into financial mentors' offices. Someone's broken the law, and that's why they're in a really bad financial position, but they'll blame themselves always, almost always. Just looking for mentor reactions in the room while I overstep, but changing that attitude, making it normal to reach out early, and also just helping people out if they're your customer and they're having a really tough time. Debt waivers, great thing, particularly in those circumstances where it's clear there's just no other way, or it's just going to go into insolvency, which is a difficult, messy process for everyone, and it really undermines people's ability to participate for a long time from there.
And there's so much shame involved in doing badly with money, isn't there? And it's so unnecessary because we all do badly with money. It's just that some people's bad days with money are very hard to get out of, right? Yeah. So the shame about money is an incredible thing. And are we changing that? Are we getting better as a society about talking about money, talking about debt, or not seeing any of that from where you're working? You look very unconvinced, Jake.
There's definitely some positive things, but
Okay.
you've still got this long cultural thing around, particularly bankruptcy. People used to get put in jail because they couldn't pay their debts, and it seems to have just lingered around as this cultural understanding, and still really implies that you've done something wrong to be in that position.
Yeah.
Which is not true. It's just a human response. If you're at a car yard, you need a car because you need your car to participate in society in any way, and someone waves a contract in front of you and it's got all these crap insurances on them,
Yeah.
and they say, sign here. Oh, we're closing in 5 minutes, you need to sign here. You're going to sign that. And for me to say, oh, that was a mistake, is absolutely wrong. That person just was forced into a power imbalance where they're in a really difficult position now.
Yeah. Yeah. Okay. How can we get the current benefit levels to match the rising cost of living? It's a great question. None of us can answer that. Yeah.
I do think that sometimes businesses could get behind things like fairer futures more, because you're seeing people unable to pay you, and that's the obvious reason. And it does seem it's community players that are out there in the public saying benefits need to go up, not power providers necessarily, not banks.
General question for all three of you. How do you undo generational mindsets around poverty and money habits? It's hard to think your parents were wrong.
It's difficult. I think financial mentors do a great job here, but it takes a lot of rapport building to get there, and it is those face-to-face conversations, yeah.
Is that something you deal with too, Michael?
Certainly, when you step into Christians Against Poverty will step into someone's home, we go and visit them in their home, which is often a fantastic environment just to let down some barriers and to build trust and rapport with someone who is really nervous and is ashamed about talking to you about this problem they've been carrying for years. One of the aspects of that is, as Jake mentioned, is relationship building, giving people a chance to talk about their circumstances and to be able to, in that process, encourage them, love them for who they are, bless them with some food. As a Christian organisation, we'll offer to pray with them if that's something they would like, to talk to them about the good things that they're doing right. I remember one of our debt coaches who goes to visit a client in her home. She said she prayed just before she went, and she was like, "What should I tell this young mum about her circumstances?" And she went and she had this visit, and they talked about their finances and stuff. And then she said, "I just really have a strong sense to tell you that you're doing a good job." And this lady just burst into tears because she said, "No one had ever told me that." She said, "My entire family has beat me down for having a kid when I was a teenager, and no one has ever told her that she's doing a good job." If that's the barrier you face to getting help, the finances have got nothing to do with that. You need to be able to meet people where they are at and to love them for who they are. And that's when people start to have that hope for themselves and actually believe that change is possible, and you take it small step at a time. They're perfectly capable of teaching their children. The children see the transformation in their parents' lives. They see the transformation in their home, and it starts to affect the way they look at other things.
Yeah. Thank you, Michael. A question's come through for you, Mark. How does MSD at a national level support BFC services that are not funded?
We don't. We don't really. So we'd like to do more. So our big thing is, like, my big job is convincing that big beehive house to invest money, and that's pretty much what I do on a daily basis. So sort of at that time of, like, we want to do more. I think today, all that information that we've got out of today, that's just data rich for me. And getting that and convincing the politicians that there's more need out there and that we can fund more people and fund them more is, just one of the things I do on a daily basis. So, yep.
Thank Thank you, Mark. Nice question. Are we only offering individualist financial solutions to people who come from collective cultures? How does that question sit with each of you?
I'd just say there's a financial mentors usually sit in community organisations and they're built up from their own community, so there will be different services around that look at different cultures and how approaches to money are there. So I think there is a mix in there, although generally as a society we do try and push people into this sort of individualised money path. And I know I really think it's important, and I think there's some great work going on from Good Shepherd around economic harm, and how there's something to think about in there as well when you're thinking in that space. Does everyone know about Good Shepherd's work on economic harm? Because I think that...
there are some shakings of heads, so let's fill us in.
So I think coming again from Australia, I was shocked at this conversation not being had. There'd just been a Royal Commission into family violence in Australia, and particularly in the state of Victoria, and in that was a recommendation that required essential services businesses to have a family violence policy and recognise that sometimes abuse is carried out through money, or that there might be some things that seem normal at first that build into quite harsh situations, or money might be used as a means of control. So these really need to think across a lot of financial products, but particularly what I was seeing there when I looked into this is perpetrators using companies to get details of victims when they'd moved on. That was at the very harsh end. But there were things like the affordability assessments, the safe lending laws were actually making a big difference around checking a loan was suitable in the first place, that maybe a perpetrator wasn't going in and getting a business loan in a partner's name, and then a woman being left with debt, a huge amount of debt that she didn't even realise she'd signed up to because a signature was forged. Safe lending laws were helping slow down that conversation and say, hang on a minute, what is this lending for, and are we doing this properly? Or if they didn't do that, there was a mechanism to go through dispute resolution or through the courts and make things right. So yeah, great work from Good Shepherd. Really encourage people to go and look at that campaign they're doing.
And Michael, you were going to answer the question that was asked about, it's gone out now, about we're talking about debt as an individual thing rather than a community thing. Should we be looking at it differently?
I think it's very important when we're talking about the well-being of a family to consider the entire household and people that they support around them. This is a constant conversation with lenders who are often approaching the issue from a framework of my money, your money, his money, her money, and this is your expenses and this is your income, and it just doesn't work like that. For many of the clients we serve, for the priority audiences of the Building Financial Capability National Strategy, that's not how it works. So we have to have discussions, and I'd just commend Jake and FinCap team have been working with the minister's team as they're talking about the changes to the laws relating to lending, about how do you identify expenses that they consider essential and expenses that you consider discretionary, and it seems to be black and white, but it's not black and white. There are things that you need to be able to pay for to keep a roof over your head. And then everything else apart from that seems to be lattes and avocados on toast. But it's not the case. There are many ways in which we need to be able to support our children, to support our family, to be able to thrive in their communities. And an allowance has to be made for social participation, whether it's Wha Lave Lave or White Sunday, or whether it's attending a tangi, whether it's travelling to your home, whether it's visiting family. There are things that if you cut those out in loan assessments, you're actually condemning someone to live in a type of hardship. It may not be financial hardship, but it's certainly societal hardship and disconnection from their whānau.
Yeah, cultural poverty. Yeah, absolutely. I've got one last question for each of you, and I'm gonna try and finish it on a hopeful note. I'm not sure that I mean it's quite hard, eh? Mark, if MSD had unlimited funding, where would you like to see it go?
Because there's so many financial mentors in the room, I'd like to give all the money to them.
Cool. Yeah.
And my debt friends, But actually, not on a serious note, I'm really quite passionate about early intervention and some of our getting in early with our families. I worked 10 years in child, youth and family and saw that we actually, when these families come to our attention, you know, we need to put more support in there, and like financial literacy and capability for those families at that time when they first get into trouble is going to go a long way in changing some of the problems. So actually I'd might give it to OT and let them get on with it. So.
All right, great. Thank you, Mark. Well done. Reading the room. Michael, I like you. Are there solutions you've come across internationally that you would like to see introduced here in Aotearoa?
Yes. Looking overseas at the way other jurisdictions like Australia and the UK, the framework for looking after vulnerable consumers is the same. Like we want to protect people from financial harm, but sometimes that's outworked in a different way. So like some of like insurance, interest commission is a huge one that pushes up the price of vehicles. That's when a dealer gets to add on an extra layer of interest that they charge, and it's profit for them, but it's of no value to the consumer. So looking overseas to solutions within their regulatory framework to better provide protection for consumers here is really helpful. But to be honest, there's really good domestic solutions as well. Just to look at the work of Ngā Tangata Microfinance or Good Shepherd and the low interest and no interest loans that they're offering people is fantastic, and they need some support as well to be able to continue to market their products and services as alternatives to the status quo, which are sometimes horrendous.
Yeah, thank you, Michael. Yeah. Yes, you may. Yes, you may. And Jake, finally, if you had a magic wand, you could wave it and fix something. What's the thing?
I think just guaranteed access to the essentials for everyone in Aotearoa. Like, it's ridiculous that, you know, whether I'm getting out of prison yesterday or my credit rating's shot, I can't get a power contract, I can't get a bank account, I can't get a phone to keep up with wins, all those sorts of things.
Yeah. Thank you. You three have been really great. That's a fantastic session. It's very challenging, it's very moving, and we're all very grateful for the work that you do. A huge round of applause, please, for Jake, Mark and Michael.
Thank you.
Thank you.